Hi everyone, I'm Corbin and I'm actually the tax product manager at Iris. And I'm excited to welcome you to this joint webinar between Iris and Whisper Claims. We at Iris and Whisper Claims have teamed up together, forming a partnership as we're two sides of the same coin in our mission to build innovative solutions that save time for you and your practice. As Mike will cover off in a bit more detail later on, Whisper Claims is a technology company focused on helping accountants grow their business, and their innovative R&D tax software allows users to build new revenues either by launching their own in-house R&D services or by introducing a framework that increases throughput and capacity with no need to outsource. This combined with Iris, which is a business critical accountancy software, which enables accountants to file all types of tax returns. You can see that each product complements the other, allowing to complete a holistic R&D claim from start to finish. I'm joined by Mike and Jen from Whisper Claims, who I will let introduce themselves when I hand over to them. They are our expert presenters today, who'll be sharing their valuable insights on how to navigate the complexities of R&D tax credits. Over the past few years, R&D has undergone significant changes with rate changes, merging schemes, complete overhauls. It can be a very confusing place to navigate. So today, we will dive into the detail to discuss R&D. So let's have a little look at what we're going to cover today. During this webinar, Jen will dive into the ever-changing landscape of R&D tax and how it has impacted the market. Then it will be passed over to Mike, who will introduce you to Whisper Claims and their story behind providing the solutions that make R&D tax reports more accessible and accurate. And then we'll move into a user-friendly demo to showcase how Whisper Claims product works. Finally, we'll open up to the opportunity for you guys to ask any questions and engage in a Q&A session. There'll be plenty of time set aside for the Q&A. But as we go through the session, if you do have any questions, please fire them off. We'll be sharing resources in the chat box. So if you do have any questions, can you put them into the Q&A, please? So let's get started. And I'll hand over to Jen, who's going to discuss the changing landscape of R&D tax.
Oh, thanks, Corbin. So yeah, I'm Jen. I am officially Ops Director at Whisper Claims, but my main background is in R&D tax relief, which I've been doing for about 12 years. So I mostly support the customers and work on making sure that our app is completely compliant with everything, which, as you can imagine, over the last year or so has been challenging at best. So before I dive into the changes that are coming or have just come in on the 1st of April, I'm going to cover kind of where we were pre-1st of April, what we got to with all that. So in 2023, there was a whole raft of changes came in. I'm going to keep saying dates. I'm going to keep saying before, on or after. I'm going to say before, spanning, because all the changes are came to us on different dates, different times, apply to different claim periods. So I'll try and be very clear about that. But the first lot of changes that came in 2023 were those that apply to expenditure incurred after the 1st of April. So this didn't matter the sort of claim dates. If you had any expenditure after the 1st of April, this affected them. And this was the change in enhancement rates. So the SME scheme rate decreased from 130% to 86%, and the RDIC rate actually went up from 13% to 20%. So massively reduced the benefits to SMEs, massively increased the benefits to larger companies. The tax credit rate was also reduced from 14.5% to 10%. So this was an attempt by HMRC, essentially, or by the Treasury, to make the SME scheme less attractive to people trying to fraudulently get money out of the government. But obviously has had a really big effect on those companies relying on large benefits from the scheme. One last minute change that came in was introduced a couple of weeks before the budget was this concept of an R&D intensive SME. So this is where companies that are doing a lot of R&D, and I'll go into this in a bit more detail in the next slide, can actually still claim that 14.5% rate. So but big changes to the rates. At the same time, for claim periods that started on or after the 1st of April, some new rules around what could be claimed came in. So companies can now claim from 1st of April 23 pure mathematics is now an allowable thing. So for the 6 companies in the country that were doing pure mathematics research, they can now claim. And they've also brought in, just to bring the scheme up to date, you can now claim for data licenses and cloud computing services. So this was a really outdated part of the scheme where the only software costs you could claim for were sort of installed, downloaded packages that you had on your machine, and no company works like that anymore. So this allows for more modern use of kind of cloud technologies and things in R&D. So that was already good. And then pre-notification was brought in, and I will talk in a bit more detail about pre-notification in the next few slides. So that is for claims starting on after 1st April 2023. So that is something that we're only seeing, all of these changes we're only seeing washing through now, because obviously those claim periods are just finishing at the moment and people are starting to look at claiming for those. The big scary change that came in last year, there was the additional information form. So this, when it was first introduced in the summer before that, it was talked about as something that would come in for claim periods starting on after 1st April 23, or even 24. But what HMRC did was bring that forward a long way and means it's now required for all claims submitted after the 8th of August 2023. It was the 1st of August, and at the very last minute, they moved it a week. And this is the first time that HMRC have mandated supporting information for R&D tax relief claims. So up until the 7th of August last year, you could have put in a claim by simply putting numbers in the CT600. It wasn't recommended, and you'd be more likely to have that picked up by HMRC, but it was possible. Since then, you can't. There's an online form, and I will talk in a lot more detail about this. The key interesting thing about this was, because it was brought in quite a hurry, it was brought forward by essentially 8 months. A lot of companies didn't know about this. So in August, 50% of claims were submitted without an AIF. And all of those were automatically rejected. So if they don't have that supporting information, they're just thrown out. I think the last information we were given was either just before or just after Christmas from the R&D Consultative Committee, and it come down to 15 to 20%. So the message has got through. A lot of that will be through claims being rejected and having to be resubmitted, but it is now absolutely mandatory. You need an additional information form. So we get a lot of questions now about pre-notification and additional information and the difference between the two, because what people have got, the kind of the information that's percolated out is that there are forms you have to fill in for R&D. So people are getting, there's a lot of confusion between what is pre-notification, what's additional information, and who's required to fill out each one. So pre-notification is something that really is only starting to hit now, because it's only required for claims starting on or after the 1st of April 23. So you've now got those accounting periods are ending and people are starting to be required to do this. So not much has come out about this. There's very few of these notifications being submitted because they haven't been required until now, essentially. But the pre-notification form is a short, pretty simple to fill out form. It's online. You do around 10 questions. It depends on whether the company is filling it themselves or there's an agent doing it. But basically, you've got to fill in contact details of someone at the claimant company that would be responsible for the R&D claim, and any agents that would be involved in preparing it. And then it's just got a simple text box that says, give us a summary of the R&D work. And again, because this is very new, we don't know actually what HMRC are looking for in that summary, whether it's 2 lines, whether it's 2,000 words. There isn't very much guidance on what would be acceptable yet. So we'll be keeping an eye on that. Now, this is a simple form. It's short. It probably would take 10 to 15 minutes if you've got the information to hand. But the complicated part for pre-notification is actually who's required to submit it. So the idea of this is that it's submitted before the end of a notification period, which is 6 months after the end of the accounting period. But it's only required for companies that have never claimed before. So if you're working with a company that's never claimed R&D tax relief, you will absolutely, for claim periods ending anytime soon, have to give notification. Or if the company hasn't claimed R&D tax relief in the 3 years prior to the end of the notification period, so the 2.5 years prior to the end of the period in question, which is all very straightforward, and that is taken directly from HMRC's guidance. So purely, if they've never claimed before or they haven't claimed in the 3 years prior to the end of the notification period. So you've got to kind of know your client, when claims are submitted, all that kind of thing. You also, I haven't put it here because it seems less likely, but if you were to submit the claim within the notification period, you obviously don't have to notify. If you get it in before the end of the notification period, it doesn't make any difference. There's some nuances in the legislation that aren't currently reflected in HMRC's guidance. So this is something that I am telling people about, and people can do with what they will. But according to the legislation, claims that were for periods starting before the 1st of April 2023, so before the pre-notification period came in, but were submitted as an amendment after the 1st of April 2023, have to be excluded. So it is actually really complicated to work out whether your company has submitted the right kind of claims at the right time to not need to notify. However, most companies, anyone that's been consistently claiming, will be absolutely fine because you'll have something that was submitted before the 1st of April 2023, and you'll be absolutely fine. So that's pre-notification. Simple form, complicated process of working out whether it's needed. The additional information form, on the other hand, is a very long, very extensive form. It's got more than 30 questions, and all these things are responsive, so it's hard to say for sure exactly how many you have to fill out. So it's got the same first set of questions around contact details, claim dates, but it does ask for details of specific projects and detailed broken down costs. And more recently, it asks about the R&D intensive criteria the HMRC have. So it's growing every day, actually. I feel like every time I go in, I find I put in a new question. So it's a complicated form, but everybody has to do it. There's no complication about working out whether your client needs this or not. You need to submit this, and you need to submit it before the CT600. One of the we're going to call them teething issues that HMRC has had is we've had a lot of people having claims rejected on the basis that the additional information form wasn't submitted before the CT600 when it in fact was. I think some people have been doing it very close together, so they'll click submit on that, they'll go into to IRIS, and they'll click submit on their CT600. So there's been some teething issues in this, but all the guidance and legislation says it has to be in before the CT600. So you submit this, you submit that, it's all put together, and we're not even sure at this point what HMRC are doing with that information. We're not seeing inquiries being initiated yet using AIF information. They're tending to be using other stuff, but we'll see how that washes through. But that's the two forms. One is just to tell HMRC you're going to claim, and it's a bit complicated to work out whether you need to do that, and the other has to be done for everything. And so that's essentially explains why we as a company focus far more on the additional information form, because it has to be done for all claims. So the next thing that has just come in, but obviously we won't be seeing claims washing through for this until next March, is the merged R&D scheme. So obviously up to 31st of March 2024, there's two schemes, the SME and the RDEC scheme. There's some complications within that, but essentially you've got two schemes. And what the government have done for the post 1st April 24, so any claim period starting on or after, they have merged those two schemes together. So it gives an expenditure credit of 20% in the same way as the current RDEC. So that is taxed. So the overall benefit comes out between 15 and 16%. So in terms of the mechanism for claiming the benefit, is much simpler than the old SME scheme. You get an above the line credit, it's taxed, and it's done. But throughout, what they've done is kind of pick and choose different rules from each of the schemes to kind of pull something together. So much as it uses the mechanism for claiming, the same as the current RDEC, it uses the current SME PAYE NIC cap rules. So that's where the credit you can get through the merge scheme is capped at £20,000 plus 300% of the company's PAYE and NIC liabilities for the year. So it's still got a cap, but it's a much more generous cap than the current RDEC. So that's there. It's one of the major changes is it allows subcontractor costs to be claimed by everyone, including large companies. So if anyone knows the current RDEC scheme, you can't claim most subcontractor costs under that scheme. So this is actually going to increase the amount that large companies can claim in their R&D claims. It does incorporate the ban on overseas R&D costs. So this was supposed to come in last April, but was delayed for a year. So, and I will go into a lot more detail about overseas R&D in the next few slides. And again, it incorporates the limitations on overseas EPWs. So you can only claim for EPWs that's subject to UK PAYE. Another massive change is that grants and subsidies don't affect the amount of tax benefit paid. So this has been, especially for, well, only for SMEs, a major headache of working out what grants were used, what they were used on, did they affect the R&D, and therefore how much do you have to reduce your claim by to be compliant. So grants and subsidies can be completely ignored under the merge scheme. And then obviously there are marginal tax rates in. So loss-making companies pay the lower marginal rate of tax on the expenditure credit. They're not paying tax obviously at all because they're loss-making. So they only have to pay the lower rate, which means that the overall tax benefit is 15% for a profitable company and 16.2% for loss-making because of the differences in tax rates. So overall, it is a simplification, but the problem we have is that much as this is coming in for claim period starting on or after 1st April, the other schemes will continue to run concurrently for several years because there's the 2-year window for claiming. So anything that ended 31st March 24 could be claimed for up to 31st March 26. So there's still a long period where we're going to be juggling all these different schemes and all these different sets of rules. So the other thing, so I touched on this earlier, but at the very last minute last year, HMRC brought in this R&D intensive scheme to try and stop the really intensive companies, SMEs doing loads of R&D being affected too much by the reduction in rate. So the current R&D intensive SME scheme is for expenditure incurred on or after the 1st of April 2023. So anyone that has a claim period that spans and overlaps anything after 1st April could theoretically claim as an R&D intensive SME. So currently, this is for SMEs who are loss-making post the application of the enhanced R&D expenditure, and their R&D spend must be at least 40% of their overall trading and operating expenses for the claim period. So you've got to be spending quite a lot on R&D to be able to qualify for this. And what this allows is those companies to get the tax credit rate of 14.5% rather than 10%. So it brings the benefit. I've got a table in a couple of slides' time of what the overall benefit is, but it brings it back up to about 27% for these companies. So it used to be over 30, it's now 27, but it's a less of a reduction than if this hadn't been brought in. But otherwise, the key thing about the current scheme is it follows all the rules of the SME scheme completely. It's just a different mechanism for when you're actually at the point of claiming and realizing that benefit. Post 1st April 24, they've changed the name to Enhanced R&D Intensive Scheme. So I will be referring to it as Eris, who is the Greek goddess of discord and strife. No comment beyond that. But this applies to claim period starting on after 1st April 2024. The expenditure limit is reduced to 30%. So the R&D expenditure now only has to be 30% of the total trading and operating expenses. But this one follows all the rules of the merge scheme. So we can ignore the SME scheme rules and it's just the merge scheme. One key difference is that companies must be loss-making before the enhanced R&D expenditure is applied to qualify. This means that most of the time, unless a company is massively loss-making and spends a lot on R&D, it won't actually be hugely beneficial to claim through the ERIS scheme. It will usually be, for anyone in the borderline, anyone making a small loss, it's almost certainly going to be more beneficial to claim through the merge scheme. So this has been an issue we've been pointing out with HMRC, that you've got to kind of go through all these hoops, work out whether you are actually eligible to claim ERIS, and then you might realize that actually the benefit is less anyway. So it's not, there's some issues with it, but again, no one has claimed for this yet, and no one will be claiming for at least 6 to 8 months. I'd say they won't see any claims washing through at all. The other more recent thing, so we did a similar webinar last month, and I didn't even have to say this, but we have special rules as well, which were brought in when the guidance came out about companies with a registered address in Northern Ireland. They have a special version of ERIS, which I haven't actually looked in enough detail yet to talk about separately, but what it does is it allows companies in Northern Ireland to still claim for their overseas subcontractors. I assume that's to do with if you are working in Northern Ireland, it would be almost impossible to separate out your subcontractors and EPWs if you've got people living one side of the border or the other. But there are some special rules, so just bear that in mind. So that's all the schemes. This is a big, I won't go into this table in a huge amount of detail, but really the point is that you can see that for SMEs, the rate has been gradually reduced by a really large amount. So if you're a loss-making SME, prior to 1st April 23, you got 33.35% back, or maximum 33.35% of your R&D expenditure back. That's now reduced to, if you can claim through ERIS, 26.9%. So it's been a big reduction. If you can't claim through ERIS, then it's only 16.2. So it has halved the amount that a loss-making SME can get back. It's massively increased the amount that a large company or company claiming through RDIC can get back. So prior to all of these changes, they could get 10.53%, and they're now up to 16.2-ish. But the main thing to take away from this slide is this: laying that out like this makes it seem quite simple. But what you have, if you've got a company with a year end of 31st March, you will be, if you go back 2 years, you could be claiming through every single one of these schemes as you go through the 2 claims that they've got to do. So you've got to be really careful about knowing what rules apply for what claim at what time, whether it's for expenditure incurred after a date or whether it's for claim period starting after a date, all that kind of thing. So there's just it's a difficult thing to navigate at the moment, just picking through when things apply and how to make sure that you remain compliant with HMRC. So just a bit more detail on overseas expenditure. At the moment, or under the previous schemes before 1st April 24, there was no restriction on R&D costs incurred overseas. You could spend anything you wanted with anyone overseas, not a problem at all. What has been brought in for current claim periods, so claim periods starting on after 1st April 24, is for EPWs, their earnings must be subject to PAYE and Class 1 NICs. So they have to be paid. They do not have to be physically in the UK. So they can be anywhere in the world, but you need to be paying UK PAYE and Class 1 NICs on that. If you've got an EPW who was paid half in paying local taxes and half in UK taxes, then you'd have to apportion that to only take the stuff that was subject to PAYE. There's also restricting payments to subcontractors. So in this case, it doesn't matter where the company's based, in what currency you're paying them, anything like that, but the subcontractor has to be physically in the UK to do these activities. So this is where we got into a whole, so if someone lived in Ireland and drove to Northern Ireland and sat in their car and did the activities, that would qualify, but if they were sitting in their house, it wouldn't. So there's some nuances in this that need to be that will be interesting as they kind of wash through. But essentially, that work needs to be physically done in the UK, and I guess the government is hoping that encourages people to use UK subcontractors more than overseas subcontractors. If the subcontractor spent half the time in the UK and half the time in Spain, then you could only claim for the time they were in the UK and working on the R&D. However, there are a huge number of exemptions to this. If you can show that the conditions or the people, or there's all these different ways that you could show that you have to use an overseas subcontractor, then that is fine and those are allowable. The guidance on this is in draft at the moment. There were a lot of comments about how that guidance was put together, so still waiting for the final guidance to give us definite lines where the exemptions lie, that kind of thing. But at the moment, the way it's set, the exemptions seem very, very broad, and it would be fairly easy to justify using overseas subcontractors. So we'll see how HMRC does that. So another huge change that's come in, and this is one where if anyone's been doing this for a long time, it's going to seem a strange thing for me to say, but the rules on subcontracted R&D expenditure have gone through it's ebbed and flowed, let's put it that way, over the last few years. So when I started doing this, the interpretation of the rules was very much like it will be under the merge scheme, and then things changed. But at the moment, you cannot claim through the SME scheme if you're undertaking R&D as a subcontractor. So if someone has asked you to do that work, there's a contract, there's a verbal agreement, anything like that, you can't claim under the SME scheme, you must claim under RDIC. And under the SME scheme, you can claim for payments made to unconnected or connected subcontractors. There's a 65% filter if it's an unconnected versus 100%. But SMEs can claim under the RDIC scheme. You essentially can't claim for subcontractors. You can if they're not limited companies, but most of the time you can't claim for subcontractors. So that first point where if there's any kind of contract, you can't claim for that work, you either can't claim it at all or you have to claim it through RDIC. There's been a lot of discussion around, yes, but what if you have a baker who has subcontracted out some software development. That baker has no idea about software development, whether there's any eligibility there, and yet the way the HMRC has been applying the rules would say that work belongs to the baker regardless. And what the merge scheme is, it corrects that issue that people have been having. So as long as the customer can show that they intended or contemplated in a very serious, I understand the technology, I understand what will need to be done. If R&D was intended or complicated to be done, then that's your work. So if you're paying someone to do R&D for you, that's your work. However, if the subcontractor does R&D at their own volition, so wasn't intended or contemplated at the point of starting the contract, that belongs to the subcontractor. And this is going back to the way that people treated this work 10 years ago when I first started doing this. So this should make it much simpler and much easier to work out who can claim for what piece of work. Obviously, customers can still claim for routine subcontractor work, which they've been able to do all the time because it's part of their R&D project. And it still has the overseas restrictions. But the key thing here is what HMRC are going to be looking at is who decided that the R&D was needed. And that's the key point. And that makes it hopefully much, much clearer for advisors in talking to their clients about what projects they can and can't claim for. Because this has been really the most complicated part of the scheme for a long time of trying to work out who owns what piece of work. So happy to see that. So alongside all of those changes, I think I'm now finished talking about changes. There might be something new comes out today, you never know. What HMRC released before Christmas was also their guidelines for compliance. This is the first. There's always been the CIRD manual, but this was more taking that CIRD manual and turning it into something more, this is how we expect you to behave when preparing a claim. So what it has is an expectation of claimants, which is really, really helpful. And it has this 13-stage process for assessing claims, covering what's eligible, and really emphasizes the need for the competent professionals to be involved. So those are the people at the claimant company who know about the R&D, who know about the technology. So it's a really good way to sort of approach preparing claims. It also has a section about the importance of a competent professional. So there's more guidance there about who's actually considered a competent professional, because within the CIRD, it just says, well, we think the definition of competent professional is, everyone knows what that means. We don't need to define it. So this gives a bit more guidance, which is really helpful. And also instructions on how to set out a competent professional's opinion. And so justify why they believe there's been an advance, why they believe there's technological uncertainty. So again, it's a really helpful jumping off point for starting to look at your own processes and how you can improve them and meet HMRC's expectations. There's stuff there on identifying qualifying expenditure, but anyone that's done this for any time, there's nothing new in there. It's just some helpful examples. But the other really interesting thing in this was their recommended approach to claims and record keeping, which is something that's never been touched on before, other than you should keep records in the same way you would for any other tax purpose. So it's giving details how to record projects from R&D claim, how to keep contemporary records versus looking back at the end, all that kind of thing. So this was a really good thing to come out. It's really, really helpful for people doing R&D claims. However, as I think anyone that's heard anything about R&D knows, there's been a massive increase in the number of inquiries that HMRC's been opening. They have been trying to root out the error and fraud that's a problem in the sector. And the way that they are behaving in these inquiries is not in line with that guideline for compliance, to put it mildly. So as the slide says, there's a mismatch between compliance and policy. So the policymakers are bringing out very measured, helpful guidance on how to prepare a claim, whereas the compliance officers are being very, very rigid in their assessments. There's a lot of issues with claims being rejected that even 2 years ago would have sailed through with flying colours. And if you look at the examples in the guidelines for compliance, they would probably be challenged by the compliance team based on challenges we've seen in the last couple of years. So there's a big disconnect between what HMRC say they want from people in terms of R&D and what they're actually then enforcing when it comes down to inquiries. Obviously, it's still really important to apply the guidelines because that, if nothing else, it can give you a structure to supporting the evidence if you get an inquiry, which is really what you need to be able to do, is defend that inquiry well, and you need all the information there. But what's really important as well is making sure that the role of the taxpayer and the professional advisor are defined and understood. I think there's been, in the darker ends of this sector, oh my goodness, sorry, my slide just moved to a different screen.
That's my doing. Sorry, Jen.
Sorry. In the kind of darker end of the sector, we've seen professional advisors deciding what is eligible, preparing claims without the full knowledge and consent of taxpayers, and then taking fees on that basis. And we absolutely, that is not the way to go. It is the taxpayer's role to plan R&D activities, record them, accept responsibility for the claim, and decide in the end whether that work is eligible or not. The professional advisor needs to be giving advice, using the guidelines for compliance, and assessing and communicating the risk of a claim. But the ultimate responsibility remains with the taxpayer, and that ultimate decision about what is eligible sits with the competent professionals. I think I'm now done with the technical side of it, and I'm going to hand it over to Mike.
Perfect. Thanks, Jen. Great. So Jen's given us a really comprehensive overview there of all of the changes, but what's been the impact of those changes on the market over the last six or 12 months or so? And the way I wanted to tackle this was think of it in terms of the impacts on the traditional consultancy market first. So what's happened to the business models, and really where ultimately then does the opportunity for accountants lie? So in terms of the traditional business model, contingent-based fees, so success fees, I guess, even 3-4 years ago, they were still running at 25 to 30% contingent fees. More recently, that's been squeezed right down to 15 to 20%, even prior to these changes. And of course, often those consultants are offering inquiry defence wrapped into those fees. There's been a ban on nominations and assignments as a part of the changes that Jen's just described. So that now means that consultants or any service provider can't claim the tax benefits on behalf of their client, take out their fees, and pass the remainder onto the client. So those multiple things there, contingent fees and ban on nominations and assignment, both mean, given the rate squeeze we're talking about next, both mean that you've seen a huge decrease in the margin on the work for people adopting those models. Of course, a restriction on the way that their cash flow operates, because they can't take those payments direct from HMRC. And of course, top right there on the screen, increase in inquiry rates, as Jen just mentioned, and significantly increase in inquiry rates mean that if they'd included inquiry defence in those fees, have now been hammered on that side as well. And just to sort of expand a little bit on those increased inquiry rates, traditionally we'd be talking about maybe a 1 to 2% sample rate for inquiries. We know from both anecdotal evidence and from some of the papers that we've seen coming out from HMRC, but certainly around January time, inquiry rates were as high as 20%. I think that might have dropped off a little bit now, and perhaps becoming more focused, but you can see the difference is dramatic. And as I say, you combine that with the rate squeeze, so reduced fees as a result of those rate squeezes, the tighter margins also as a result, just means that smaller claims are an area that traditional consultants are moving away from. And in fact, when it comes to particular sectors, and again, HMRC's focus on particular sectors for inquiries, you've seen service providers pull away from those too. So I'm saying at the bottom right there, service providers exiting. We've seen a number of large-scale providers pull out of the market completely and essentially declare themselves out. I hesitated there to say go bust, but I think that's the reality. But we've also seen a number of providers restrict the sectors that they're willing to work in, and certainly restrict the claim sizes that they are willing to address. And of course, all of that is creating a sort of broader knock-on effect in the market. So when we think of it in terms of opportunity, we're seeing a significant shift in the nature of the conversations we're having with accountants when we first speak to them. So if I go back 2-3 years, the majority of new prospects that we were talking to were looking to grow their firm, grow the top and bottom line, and they were seeing R&D as a way to do that. So they're coming to us because they were looking for a growth opportunity. I think that's changed significantly, particularly in the last 6 months. What we're hearing more is that those accountancy firms are actually being approached by existing clients looking for support. So that's either because the service provider has disappeared, so as per the previous slide, or the service provider has turned around and said, we're not willing to support you now because of the sector or because of the size of claim, or they've been spooked by the news around the scheme and the news about changes and the news about inquiry rates. And the first thing they want to do is turn to their trusted advisor, their accountant, and ask for advice. So we're seeing that essentially going through the roof and being a driver for accountants to look at, well, if there's a need amongst our client base, how are we going to go about fulfilling that? In line with that, we're seeing a shift towards a new pricing model as well. So rather than contingent fees and wrapping inquiry defence into those fees, we're seeing a lot of our customers move towards hourly rates or fixed fees instead, and charging for the output rather than the outcome. So rather than charging for us, let's call it a successful claim, they're charging for the production of a report. And by doing that, of course, they're de-risking the situation for themselves and separating the report preparation from any inquiry defence that might be down the line. So de-risking significantly by doing that. And then the other sort of observation in here is that a lot of those traditional service providers who are perhaps only R&D focused are now in a bit of a rush to enhance and build their service portfolio. So they're making up for the issues that they've got in R&D by bringing in new services. And of course, one interesting observation here is that you as accountants have already got a wider portfolio of services. And so often accountants are saying to us, well, actually, R&D is just a part of that portfolio. So we're already essentially de-risked to a certain extent here. So all of those things combined with using the right tools and the right support, knowing where to go to make sure that you're offering the right service and you're understanding the scheme correctly, are where opportunity lies. And of course, it's that bottom right box there, the right tools and support, which is where we position ourselves. So just to give you a little bit about Whisper Claims and what we do, the first thing I always say when I put this slide up is that we're not consultants. So we don't do claims for anybody. We focus on providing those tools that empower you to deliver an R&D tax service under your own brand. And we do it with a combination of things, award-winning software. I'm going to give you a really brief demo of the software in a second. A range of learning tools, so that includes ebooks, and Corbyn's been posting some links up to our ebooks as we've gone. So you'll have seen some examples of those. We run webinars often. You're in the middle of one right now, and we have a really active blog section on the website as well with thought leadership content. So you access all of that. But a real key component to our offering is our advice line support. So through live chat, telephone, and email access, we're there as an additional shoulder for you to lean on when you're preparing a claim. So if you've got an issue around eligibility of a particular project, something you don't understand about the legislation, that's what we're there to help you with. So where have we got to date with all of that? So we launched in September 2018. We're currently working with about 150 firms nationwide. I checked out the stats this morning. We've just gone through 3,625 claims to date using the tech. And that represents about 640 million of eligible spend in total, which is roughly equates to about 160 million of tax benefit to the clients of our customers. I mentioned award-winning software. We've got the awards just up on the right-hand side of the screen there. I'm not going to bore you with going through them individually, but just to say the thing we're most proud of with those awards is the fact that we've got a combination of recognition from the tech side of things that recognises that what we've done in taking a people-heavy consultancy-based process and turning that into a software-led structured process is actually a really difficult thing to do. So we've had recognition for that, but then we've also had recognition from the accountancy profession for the impact that we've had on the profession in enabling firms to get into this market and deliver this service with confidence. So it gives you a flavour of where we've come from and where we've got to so far. So I'm just going to break out of the slides and just jump into a quick product demo. So just bear with me while I do the quick switch here. It's never as simple as I thought it was going to be. There we go. This is better. Jen, can you see the app there, just to be sure? Yeah, cool. Okay, so just to give you a flavour, this is the essentially the back end of the tool. This is our dashboard. So you as the user would come into the system through this dashboard. Our system is white labeled, so top left there you can see your logo here. So if you are sat in front of a client using the software, or indeed if you invite the client in to use the software, they're going to see your logo and see it as your system. I'm not going to say too much about the dashboard because we're limited on time, but we'll just show you this workflow screen. It just gives you, I would do that, wouldn't it? Sign me out, just bear with me. Best laid plans and all that. There we go. So I just want to show you this workflow tab. So this just gives you a flavour for some of the data that we hold in here. So this is showing us that we've got a range of claims underway. It's showing us where those claims are in the process, and it's given us an idea of upcoming tax payment deadlines and hard deadlines as well. So we're able to sort our lists on the basis of all of these factors. So it's just given us an ability to manage our portfolio of clients and claims at any given time. And we also have this little calendar tool up here that's telling me that I've got 2 claims with upcoming tax payment deadlines. So if I click on that, it's pulling out those claims and just allowing me to focus on the claims that need the most input in the nearest time frame. So I'm going to pick on a single claim here. I'm going to take this one at the top here and just take you in and show you what the claims process looks like when you're preparing a claim. So if you were sat down with a client, you're going to work through this, these are the screens that you'd see. I'll give you a really quick flavour. Every page is a question or a statement, and we've got really simple interfaces. So we use tick boxes, as you see here, drop-down lists, sliders, so really simple interfaces throughout the whole process. And for every answer that you give, you get an immediate feedback on that answer. So to just take that first question there, is the claimant a limited company? If I say no to that, then immediately we get to an end point in the process. There's no eligibility for that particular client. So all the way through the process, there are kind of gateways, if you like, and we'll stop you if it's evident that there's no claim to be made. We've got a highly structured process based on what we call an adaptive question set. So the answer that you give to any given question is going to determine where you go into the system next. So if you've got a really simple claim, that's a really quick, easy process. If you've got any complexity to it, then we'll take you down the appropriate avenues and explore everything we need to for HMRC. And just to sort of open up these sections over on the left-hand side, just to give you an idea of all of the areas that we address, I'll just pick on, actually, I'll pick on this section. I'll just flick through here and show you. Here's an example of the drop-down lists, and wherever we've got those drop-downs, we've got the ability to add free text. In the next section, we've got sliders in here. So again, just to give you a flavour of how easy these interfaces are to use. So we work our way through structured question set. We get to a point here, we're addressing everything that HMRC needs to know about. We get to a point where we start to look at the individual projects. So everything prior to this project stage is really sort of generic about where you're operating, why your activity might be eligible, why the business is eligible, and so on. We get to this project titles section, and you'll know from what Jen said earlier on that the AIF now mandates that you need to cover a technical detail for a given number of projects, depending on how many projects you're claiming for overall. So we ask for how many projects you're covering in this claim. So we've got 5 in this case. And then we ask you to give those projects a name. When we get into the cost section, the next section, we're going to use those project titles to then start to allocate costs to projects. So it's costs up next. We start with PAYE, and we have several ways of inputting costs. It's either manually into these columns, or we've got a little CSV upload tool here. Really simple to use. If you've got a spreadsheet that doesn't necessarily map onto these columns, it's no problem. You can use the tool to map your data appropriately. And we then get into mapping those individual staff members to the projects, as I mentioned, and again we can use a CSV upload to do that. Now, as we work through each of these areas of cost, we're going to do the same thing. We end up allocating these cost areas to projects. So when we get to the end of that process, we get to this technical detail section, we're then left with a little ready reckoner, if you like, that's showing us for all of the projects how much spend has been allocated to each of those. And this is now enabling us for the AIF to choose which projects to describe in detail. This particular example is an SME only claim. If we had RDEC spend going through this, there'd be an additional column in here showing the RDEC spend, and again enabling you to select the appropriate projects to describe. So in this particular case, with 5 projects, we need to do a minimum of 3 that represent more than 50% of the cost. And you can see I've got one project that's got over 50% of the cost itself here. So even if I remove one, the system won't let us carry on because it's recognizing we have to do 3 even though we're over the 50%. So there we go. So next we get into the technical detail section. So here we're prompted for each of those projects to provide detail around industry baseline, the advance, technological uncertainties and resolutions. And you can see we've got the ability to style each of these sections. We can add diagrams if we need to in here as well to bolster those descriptions. So once we've done all of that, we're actually at the end of the process. So the next step is review. I should just add, by the way, I skipped over it earlier. You do have the ability to involve your client in this process, so you can invite collaborators into this. Simple form to do that. Email, first name, last name, and their role, and the system sends an automated email out to invite the collaborator into the process. And actually, since the implementation of the AIF, we've seen a significant increase in the number of claims involving collaborators. And I think that's down to the fact that, back to the GFC3 slide that Jen put up earlier, service providers are trying to get their clients much more deeply involved in this step, the actual write-up of the projects, reflecting their status as competent professionals, of course. So once we've done all of that, we get into the review stage. So we'll just click on this and show you the review. Over on the left-hand side of the screen, we've just got a summary of all of the inputs that we've put in working with the clients. That's your kind of opportunity to review all of that with the client. And if you're not happy with a particular area, you can go in and edit that from that point. And then over on the right-hand side, we've got this automated claim risk assessment. So what this is doing is highlighting any particular areas of concern with the claim that might act as red flags for HMRC. It's nothing to do with technical eligibility. It's to do with the higher level red flags. So things like the SIC code here indicates that the company is in a less eligible sector. Turnover ratio is high for this particular company. In this sector, the turnover ratio is high, I should say, and the eligible expenditure is particularly high for this sector. So it's these headline things that may well result in this claim getting to the top of HMRC's pile when it comes to inquiry. So it's not to say don't claim, but it's certainly to say there's a conversation to be had with this client to warn them that this is a higher risk claim and they need to prepare themselves for that down the track. We'll give you an idea of the overall qualifying expenditure just in headline terms, and then we tell you how much this claim is going to cost, and you've got the ability then to finalise. So when we finalise, essentially what's going on in the background is the system is writing the report essentially in real time and producing an output for the AIF. Now, I'm not going to download that now. I'm not going to take the time to do that, but I am just going to share with you what the outputs look like just very quickly. So we've got the, find it. There you go. We've got the report itself. As I mentioned earlier on, your logo would appear in here. It's a white label system. And the report essentially captures all of the data we've captured through those easy interfaces that I mentioned, turn that into a written document. And down at the bottom of this, we've got our project details that we'll have entered in that last technical detail section. And then we get to the breakdown of our costs. So we present the qualifying expenditure and we present all of the detailed costs that have gone in support of that QA as well. So you've got everything that you need for the CT600. And then what we also provide you with is a text file that includes all of the data for the AIF. So bear with me a second to switch over to that. There you go. So this is as I say, it's a raw text file, just so that it avoids any squiffy formatting that might affect how you upload this into your into the HMRC portal. And this is structured in such a way that all of the questions are in the right order and presented in the right way for the AIF. So you've just got a simple cut and paste job from this document straight into the AIF portal with HMRC. So that gives you a flavour of the process that we utilize and the nature of the outputs that you get from the software. So I'm just going to go back to the slide set and I can't find it. Give me a second. And go into here. There we go. Brilliant. So we're right back to Q&A. So I'm going to hand back to you, Corbin, for any questions
Lovely.
that might have come through. But what I'm also going to do is put up a quick poll in here that just gives anyone who wants to have a more detailed look at what I've just described there, maybe do a one-to-one demo or show up at one of our one-to-many showcase events. You've just got the opportunity through a poll to indicate that. So I'll leave this poll up and running, Corbin, while we're dealing with any Q&A.
Lovely. No, thanks for that, Mike. Thanks, Jen. That's really insightful stuff there. So we'll have a look at some questions that are coming in. Please feel free. We've got a few minutes left to answer any questions that anybody might have. So please feel free to go to the Q&A box and just pop your questions in. We have Mike and Jen here who are experts in this area and have a lot of knowledge to share. So any questions, just pop in there. So let's have a little look, see what's coming through. Okay, so I've got a question here. It says, I believe HMRC are still receiving high numbers of submissions without an AIF, sorry. Is that still the case, and what are the consequences associated to that?
So as I mentioned in the slides, it's about last time HMRC released any detail, they said it was about 15%, somewhere between 15 and 20%. That must be reducing. They don't give us the details very often, but it's still, I'd imagine it's somewhere between 5 and 10% at the moment. The consequences of not filling out the AIF and submitting it before the CT600 is essentially it like fails silently, to use a software term. So HMRC will just remove the R&D claim from the CT600. It just gets taken away. So it doesn't open an inquiry, it doesn't do anything like that. It's just not allowed and is taken away. And then as far as we can tell, and again, this is something that's because we're only in the first 6-8 months of this, what then the advisor or the client has to do is resubmit that CT600 having done the AIF ahead of it. So you have to go through the process again. Even things like if you didn't do an AIF or you submitted it after the CT600, it goes away after 28 days. So if you don't realise this in time, you are going to have to fill out the whole thing again. So it is a pain in the neck to have to go through that process.
Okay, that's really helpful because obviously there's quite a large consequence associated to that. So it's really worthwhile being aware of that.
Definitely.
Actually, Corbin, just to reinforce that point, I think this is perhaps the first time that we've seen HMRC really follow through on their promise when it comes to consequences. So, when that figure came out of 50% of claims were rejected in August for not having an AIF, I think the whole market sort of took a sharp intake of breath, because often when these kind of announcements are made, there isn't that follow through, and it's clear that with these rule changes and with this kind of change to the regime, HMRC are following through and are policing it in a much more thorough way than they ever have before.
Yeah, and I think the market would listen with a statistic of 50% rejections, so there is a huge consequence.
Yeah.
We do have another question here. So regarding the AIF, is it difficult for a consultant to submit online without being the tax agent who is the accountant?
Remembering to unmute. Yes and no. So this is something that we, over last summer and into sort of the autumn, we did see people scrambling to get an agent services account. So they have to have an agent services account. They don't have to be the official tax agent with HMRC. The AIF goes into quite a lot of detail about any agent. So both the accountant and any consultant that's worked on a claim, you have to give their details in the form, as long as that consultant has, through whatever means necessary, got an agent services account and therefore can access the form as an agent rather than as a company, an end user, then they can submit it. So there are more barriers to consultants doing it because we have a few consultant clients and a lot of them didn't have agent services account before the AIF came out. So they had to kind of jump through the hoops to get to that. But once they've got it, it's the same for them as an accountant, but everyone has to put their name on it. And that is a really key thing. And I think that'll be a big part of HMRC being able to target specific advisors they know are not compliant with the rules, let's put it that way, because you have to put the name of anyone that's touched the claim into the AIF. So it'll give them much richer information on who's preparing what kind of claim.
Thank you. So we do have a couple more minutes. So is there anybody that has any more questions? Please just quickly pop them in. We could answer probably one more maybe if there's one coming in. If not, I think we can round it off. Let's give it a second. Okay. So to round off the session and leave you with some key takeaways. So the current R&D market is in constant flux, with the SME sector broadly expected to claim lower rates. The environment remains notably complex with ongoing changes in regulations and rates. While we don't expect that complexity to change for a few years, with the right tools and support in place, you can navigate the complexity and maximize your clients' R&D tax refunds. As we see consultants exiting the space due to the reduced fees, there is an excellent opportunity for businesses, accountants to gain significant market share by embracing these innovative solutions like Whisper Claims, Iris, to claim your client's R&D tax relief. So thank you for joining us today. An email will be sent out to you all with the recording of this webinar, along with all the material shared in the chat box. We hope the information presented by Jen and Mike has been informative. We invite you to reach out to us with any additional questions or learn more about how Whisper Claims can support your unique R&D needs. So with that said, enjoy the rest of your day and we look forward to connecting with you soon. Thank you.
Thanks, Corbin. Thanks, everyone.